Rampant inflation is forcing the Bank of England to raise interest rates, and this is feeding through into higher mortgage rates. You can see just how much they've risen over the last year and a half. The average rate on a 2-year fixed mortgage has now hit 6.01%. The 5-year, that's the blue line, has also ticked up. And the prospects for homeowners are now as bad as they were in October, just after the mini-budget. Uncomfortable news for a Prime Minister who was tasked with sorting out the mess of his predecessor. And these rates, they're going to stay higher for longer too. Look at the peak on the red line. Back in May, financial markets thought the Bank of England would start to cut rates by the end of the year. But now, if you look at the dark blue line in the middle, well, we'll be well into 2024 before the bank can even contemplate that. Remember, expectations about where the bank rate will go influence lenders when they're pricing their products. And all of this will come as a shock to the more than 2.4 million homeowners whose fixed deals expire between now and the end of 2024. Households will be paying, on average, an extra £2,900 a year. Over the 5 years to the end of January 2026, borrowers will have paid an extra £15.8 billion on their mortgages. That's a lot higher than we thought back in May. And for people like Megan Johnson, a single mother and junior doctor whose mortgage payments are about to leap by £300 a month, they feel like they're sitting on a ticking time bomb.
I'm actually going back into training in August, which obviously with the news and the junior doctor strike, so my pay is actually going to take quite a drastic cut come August. So I'm probably going to have to work more than ever just to find the extra £300 difference, to be honest. So it's going to be quite difficult really, but obviously just going to have to juggle it really and work extra shifts.
It's important to properly convey the scale of this. For those who remember when rates were around 13% in the 1990s, 5 or 6% may not seem like a lot. But the headline figures don't tell us everything, because people are taking out much bigger loans these days. And when you adjust for the size of loans compared to income, well, it's a very different picture. People taking out new mortgages today are facing the biggest home loan squeeze since the housing crash of the 1990s. And the consequences of this go beyond homeowners. Proportionately, fewer people own their own home than 20 years ago. But renters will also be hit if landlords pass on higher mortgage costs to tenants. So it's a bleak state of affairs for a country already grappling with the cost of living crisis. The government has explicitly ruled out providing any support to homeowners. But with a general election on the horizon, the pressure to do something is unrelenting.